Michael Cole-Fontayn, Capital Markets Union, launched 3 years ago. Where are we today?
Today we've made substantial progress, but there's still a lot more to do. And we take stock here in Brussels of progress to date and recommendations for further energy and impetus as we fast approach two critical factors. One, the end of this Commission's life, and secondly, the exit from the European Union of the UK.
I want to see from the next Commission, how do we bring this forward? What barriers need to be removed?
The main capital markets union barriers that need to be removed are around insolvency law, making the pension for European citizens truly portable and truly investable across borders, making sure that we look at taxation to ensure that there is no significant barrier to cross-border investing. And finally, it's really making sure that the Capital Markets Union complements the completing banking union to make sure that European capital markets can flourish in the future and provide an additional source of both financing, but risk management and risk transfer.
We've seen some progress on insolvency, and the European Parliament have recently reached a compromise agreement on the personal pensions. Does this go far enough?
It's positive progress, and we would like to see it go further. Indeed, we would like to be able to tick these subjects off the list. I think in that way we can really start resolving some of the non-performing loan issues that still reside on bank balance sheets. We can further kickstart the securitization market in Europe and ensure that a vibrant source of cross-border funding flowing to support a European economy that is actually doing pretty well at the moment. We've seen over 21 quarters of consecutive growth, and Europe is in a reasonably strong financial position. Let's not waste this opportunity to make further progress.
The B word, Brexit, you've mentioned it already. London is an incredibly important capital market for all of Europe. It is our capital market. What does Brexit mean for your industry?
Brexit for financial services means a great deal more complexity, significant structural reform, the creation of new legal entities, the potential for quite a lot of financial instability if we don't get contract continuity, and some of the more technical issues relating to clearing of derivatives contracts resolved. But when Brexit is over and done with, we all know that we're going to need to ensure that there is a flow of capital, of ideas between the EU 27 and the UK, but not only that, the rest of the world. The brightest minds may sit in Tokyo, in Chicago, in San Francisco, in Singapore, and we want to make sure that those bright minds have a focus on investing in all the great opportunities in Europe. And I think the Capital Markets Union will certainly facilitate that. But beyond that, we want to see Europe really integrated in the capital markets of the world. We do have global capital markets, and it's really important that capital flows globally.